So this is one problem we're really trying to solve.
Yeah.
On one hand, I think it's super important to log your personal labor hours and your back office. Administrative office, so that you can get your ratios right from the start and that you're always hitting consistently within those metrics. But at the same time, it's a pain in the butt to log all that stuff. I know you're trying to get out there and put out fires half the time and just, do the basic labor that everyone, your employees are doing. But yeah, so basically when you start out, your draw will be on the cash flow statement.
So this is, you are not on payroll, you're not paying taxes on it. So therefore, if you are paying yourself as an owner, which some owners don't pay themselves, they don't feel like it as if they have enough money to pay themselves. But a lot of them are needing to support their personal side. And so if they take money out of the business and do not pay taxes on it as a salary in some shape or form, then that is called an owner's draw, and it ends up on the cash flow statement. It doesn't end up on the profit and loss.
So what happens is it makes your income statement look super inflated because you're not accounting for your own personal labor within your income statement. Mm-hmm. Now, if you were totally out of the business and you were just collecting a check and your dividend, whatever you want to call it, then the income statement would show the bottom line would be your profitability. But if you're still working in the business, then the bottom line does not include your salary unless you're an S corp. If you're a sole proprietor, then it moves to the cash flow statement. That's where the confusion is.
Right. So in wanting an accurate P&L, which we talked about earlier with those common bookkeeping errors, it's hard it's hard to compare yourself if you have no salary to show for on your income statement for all the work you as a sole proprietor are doing in your business. And they're working hard. They work every day. They have a few back office hours to log, maybe a lot, but a lot of their time is spent with one other guy, in the truck. And those hours and the payment, you would have to pay somebody to replace you, doesn't show up on the income statement. So we're finding that that's a really, in order to compare to the other people in the industry or to the numbers we find in the industry, we're finding that most of our clients don't have that number that they pay themselves on the income statement. It goes on the cash flow statement as a result of not paying any sort of taxes on it. They're just pulling interest out of their business to pay,
their cost of living. And another thing it doesn't show is all the back office work that they're doing. So it makes your overhead costs look really low on the P&L too, when it's really not.
Right. So profit looks a little inflated when, you're not new, but just whenever you're not paying a salary to yourself.
It's mainly because you're not logging your hours. That's really what it boils down to. But at the same time, it's really annoying to have to do that. So I guess we're leaning towards that you should log your own hours and how much back office work you do, unless you just really, really don't want to do it.
Yeah. And I have a lot of clients that say, well, I have to pay taxes on that. So you have to, at some point you're paying taxes on most of it. I'm not a CPA, so I'm not going to give any sort of tax advice. But if we were to ever suggest, from the start, they get on some sort of salary, we would make sure, obviously, that within the rules and the guidelines of a CPA, that it's a smart and wise move. But all that to state, it is very hard, and the profit or bottom line is inflated as a result of not seeing that, that labor on the P&L. Rather, it's on the cash flow statement as money moving out of their business.
Yeah, and everything you guys just shared is kind of from a bookkeeper's perspective, and I'll share because I've made this mistake when I started out. We're running a 3-man crew, and I'm working all day. I'm in the field, doing the edging, doing the mowing, coming home, sending out the quotes. I'm doing all of this, but because I wasn't considering my salary in that mix, I was confused with my numbers. And in addition to that, I didn't have the mentality of, okay, I need to replace Paul Jamison with this foreman that I have to hire, and I have to pay. I'm already paying me, who's going to be in the future, this foreman, this amount. And it would have been an easier transition. Well, let me say it like this, because my business was so messed up. It would have shocked me faster to realize my prices were too low, because I had to charge more in order to pay myself this, which ultimately I needed to replace myself with. And what I personally did, Megan, this is years before you guys ever met me. I worked at Carrabba's. So I had money that I was living off of, and I was reinvesting in the business, which was code for I was broke. Like I wasn't pulling. Some of y'all are laughing because you're like, I think I know what you're talking about, dude. But if you can early on be like, oh no, I'm paying myself, the owner, as the foreman or as the operator this amount, then I think it's going to get a little stiffness in our backbone to charge more,
Right. Exactly.
to faster. Because I honestly couldn't have afforded to have a quality human being with a wife and kids that's capable of being a foreman. In those early years, I couldn't have even afforded to pay that person to keep them around long enough.
Right.
And so I was just doing it all myself and confusing myself, looking at my numbers like I'm doing all right, but I really wasn't calculating let's say a 60,000 or 45 or $55,000 salary that I really need, that I was paying myself, that I need to be paying someone else. It was missed in the numbers,
Right.
and it confused me. And I think I'm sharing my vulnerable, humble beginnings because it's so common that people don't get it. Now, the companies that are legitimate and profitable and sustainable, they get it. But a lot of the new folks, they just don't understand this. And I hope we're making sense to get us in order.
There's so much fine tuning that can be done just from educating yourself on all of this, you know? And so, and that's our ideal client. It's somebody who says, you know, first of all, with the new service, it can be anybody from 1 year to 2 year in business. If they're out getting jobs and they feel as if they're really good at that, and so the organization piece, they would love to offboard somebody, that's who we're there for. But also, you know, the one who maybe 4 years or 5 years in business and says, you know, I haven't really launched or grown like I want to, but let me make sure I can set a foundation for myself and can grow profitably and move themselves out of the business or into the position of the business they want to go as soon as they can. Mm-hmm. And, you know, I've said from the beginning, I don't act as if I own a lawn care business. So your business, as you sought to do it, you know, that was the best you did at the time. But hopefully, you know, being the landscaping bookkeeper, we can provide that resource for these people to get it right. Like Joey said at the beginning, from the beginning, at least as best as they can with the time they have.
And then when you have a bigger company, you can instantly identify problems because you've been doing this for so long at that point, instead of just making it all fresh and you're starting to manage 2 and 3 crews and everything's just caving in on you and you're getting super complicated.